Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about Lucid Motors, ticker symbol LCID. Now, for those of you that don't know what Lucid is a electric car manufacturer, and you can see all the designs right here. And a lot of people love to look at a company like this and think it's going to be the next Tesla or Ford or a company that, seen a lot of growth over the past couple of years. The reason why a lot of people think that is because there's a lot of emotion, right? Everybody that had FOMO or everybody that missed out on Tesla is looking for new investments. That's why we've seen a pretty much an extreme growth just over the electric car sector in general, such as, we had a company like Lucid, we had Nikola Motors that exploded up, we have Plug Power and a lot of other companies like that. And you can see they have more of a luxury style feel to them. And they're pretty expensive. If we look at this one, this is starting out about $169,000. This one here, $139,000, $95,000, $77,000. So you can see they're definitely more on the expensive end, especially if you do compare it to Tesla, just because Tesla, some of the cars are about $35,000. But you can see if we look at the chart, this is going to be the yearly chart. So this whole chart right here represents 1 year of trading history, and then each candlestick represents about 1 day of trading. So you can see we had this huge initial spike where the stock went up from about 21 bucks all the way up to about $64. Anytime a stock goes up that much that quick, you can see it was way overvalued on the RSI. It sold off and really didn't do much, right? We did find some overall resistance at about 29, support down here at 17, and the stock kind of just consolidated there for a while. It didn't do much, and we slowly had a stair-step breakout, right? The stock slowly started stair-stepping its way back up, and a lot of people thought it was going to hit back up to these highs here at about 64, but it definitely came up a little short here, and it came up, was a little overvalued on the RSI, and we had a little bit of sell-off. And overall, over the past couple of weeks in general, we've just seen a lot of natural sell-off just from the market. That's probably why we got a lot of sell-offs right in here, just because anytime the general market's selling off, riskier stocks, riskier growth stocks are going to sell off more. And you can see this sold off right at about 42%, which is actually pretty large, especially for a stock like this. And given the general stock market only fell about 7%, this one is going to be more volatile. Anytime you invest into more of a higher volatility stock, you're going to have higher risk, higher reward pays for sure. But if we actually go ahead and we look at a lot of the fundamentals here, right now we're on macro trends. I love macro trends just because of how easy they make, analyzing stock. So you can see the overall revenue was about $0, right? They didn't make a lot of money right now. They're still in the development stages, and that was about a 30% decline. So anytime you have a startup like this that doesn't bring in money, higher risk, higher reward. And if we actually go to assets and liabilities and we go to cash on hand, they have about $4 billion in cash, which is actually pretty decent for a stock like this and a company like this, just because they have very little sales. So if the company ever slows down, they do have some cash to continue to grow the business. But when you compare it to the long-term debt, they do have a little bit of long-term debt, but it's nothing compared to the cash on hand. So they have way more cash on hand than long-term debt. But looking at the margin, you can see they don't make any money. Their margin right now is 0%, which in the grand scheme of things is not the worst that we've covered here. We've seen a negative profit margin, so companies that are actually losing a lot more money. But given right now this company is not profitable, I really think when the cars start coming out, I think we will see a little bit of kind of how Lucid feels, if the market loves it, if it hates it. And I honestly think that this is going to be a higher risk, higher reward investment for sure. So if we actually wanted to buy it, where would be the best time to buy it? Well, right now it's at a 34 on the RSI, so it's a decent price to buy. And I really think that we have this slow and steady general upward trend. We go to the 3-year chart and you can see a lot of resistance, support. So obviously we want to get it to, this down here. We want to get it as close as we can to this $18, $20 mark. Given it's 29, good strategy for this would be dollar cost averaging, especially right now, given we've seen a lot of sell off from it. So what I would do is I would invest a couple dollars, maybe even if it's 10, 20 bucks every single week, over the next, 10 weeks, 10 months, whatever that time frame may be for you guys, and get a good average price for your shares. And I obviously want to go heavily into a company like this just because higher risk, higher reward. So I definitely keep it under like 3% of your portfolio size. So if you have like $100, the max I would go is about $3. But that's for every 100 you have invested into other assets. $3 into this, $100 somewhere else. $3 into this, $100 somewhere else. Just because you want a well-diversified portfolio. So if this does sell off, it's not going to hurt your balance sheet in your portfolio. So that's kind of my opinion about it. Definitely higher risk for sure. Major support near 18 and then resistance up here at 64. So that is it, guys. I hope you guys enjoyed the episode. If you did, hit that like button, subscribe. We will see you guys later in tomorrow's video. Remember to stay happy, stay positive, and stay safe. Take care, everyone.